Hi everyone, I'm back at Don at Stock Market Caddy, and today is June 28th. June 28th at 8:15. It's a Sunday night. The futures are open, and what we're going to do this evening is give you some insight and some performance results on a timing model, a strategy, an algo that we had written back a few years ago. I'm going to show you the trade results over the last 5 years. And more importantly, we're going to also post a video to follow the video we've already posted on our website. It was June of last year that we posted what the NICKLAUS system timing model had done. You're welcome to go there. It's free. Go to our website, go to the NICKLAUS timing model. You'll see the video in June of last year. This video is going to be posted right after it. And so you're going to get a chance to see if you had joined this past year, and if you had followed this system precisely, how much you would have made or lost. And actually you would have made money. You would have actually done very, very well. We're also going to show you, though, more importantly, not just what the system in fact did, but what were the rundowns. You know, it's important when you have a strategy, you know, how much money would have run down? How much of a drawdown would I have had to suffer? How much of a run up maybe I could have done better than what the strategy did. So we're going to show you or give you that kind of insight. Now, first thing is you're looking at these and you're probably saying, oh, well, he's using the Bollinger Band. And well, we are a fan of the Bollinger Band, but the strategy isn't using the Bollinger Bands at all. Let me show you. The NICKLAUS timing model, and we'll go here. Let's see if we can... let's see, I want you to see the, here we go. It's running off of the underlying symbol, in this case the ES, which is the S&P, the VIX, and also the 10-year bond. And it's doing that on each of the markets. So it's the ES, and let's see, I can't change it. So the NQ, and then it is also getting a data feed from the VIX and a data feed from the 10-year bond. The YM, which is the Dow, also getting 2 additional data feeds. The Russell, and then we have a component we call the VIX component, and we like to see the VIX in the opposite direction of the other market calls. Now, what I'm going to show you is the performance report, and you can break out a pencil and pen and write down this performance. But this is exactly what this, because this is a strategy that goes overnight. It comes in, the signal comes in at about 5 o'clock, not every day. On average, we'll get a signal about every 5 days. Sometimes they last for a couple of weeks, sometimes only for a few days. We don't win on every single trade. But let's look at that performance report. So this is over the last 5 years. Hopefully it's giving me, let's see the date. Yep, it's going back to 2015. So over the last 5 years. Let's look at not just the equity curve, but you want to look at the monthly net income. This is 10,000. Now this is one contract on the ES, on just the ES. So you can see we're in the green more often than we're in the red. There's been a couple of bad months. And let's also show you the performance summary. This is over a 5-year period. It's actually done more than that, but let me show you. I'm going to go to the trade graphs. This will be more, I think, more helpful. We want the average of the winning trades. So this are all our winning trades. The average winning trade is 5,235 right here. 5,235. What's the average losing trade? The average losing trade is 1515. See, it's right here. 1515. Almost 5 times. That's how you make money, folks. What kind of a drawdown would I have had to suffer? Well, the drawdown would have been 1427. to capture most of those. You would have had to be prepared to suffer, 1427 drawdown, which isn't really bad on one contract. But what kind of a run-up could I have done better? The average run-up is 4,275. Not bad, huh? Now, let's go to the periodical reviews, and let's look at the annual over the last 5 years. So, this is, we'll look at the mark-to-market, okay? So, in 2018, it did 31,000. 2019, in 1 year, it would have done only 5,000, so it wasn't a very good year. And then since January 1 of this year, one contract, this is the number I want to write down, one contract has done 82,412 to round that out. One contract right here. So let's just go. I won't take up too much of your time. You want to get to the bottom line. The rolling 12 months, the last 12-month period has done 69,000. This year's trades, though, there's been 18 trades, 44% profitable. Profit factor of 4.58. Pretty darn good. The NQ, let's go as well. Let's go to the periodical, and let's look at the annual. And this year, 84,000. This is for the NQ. 84,145. And you can see what it's done in, in the collection of the other years. The rolling 12-month has been 65. Let's go to the Dow. And we don't want the daily, we want the annual. Since January 1, 74,945. 945. Rolling 12 months, 69,200. The Russell, go to the annual, and these are accurate. And the Russell this year has done 40,000. 40,655. Last year it didn't do very much at all. The rolling 12 months, some 37,000. And then the VIX component has done 22,520. 22,520. So if you joined in December and you ran one contract in one mini contract in each of these markets as NICKLAUS signaled, and you carried it all the way through, you didn't scalp. Now we had significant high watermarks as you saw the run-ups. But we're going to just assume that you didn't do any scalping and you just stayed through and through. Let me tell you what your total would be year to date. Okay, so the total, if you had run one contract in each of the 5 markets, year to date through June 28th, you would be up 304,677. And we still got 6 months to go. Now, it is true, folks. What's happened in the past may or may not happen in the future. And that's why most people don't trade, why most people don't bother taking control over this part of their life. Because the truth of the matter is, most people really don't understand how markets work. And emotionally, they're not prepared to take drawdowns or to take losses or to take the time to make these decisions just to follow or just to subscribe to Stock Market Caddy. They say they want better returns, but they're not prepared to, to make that time commitment and that risk commitment. But if one had, that's how much you'd be up. Now, we don't know what's going to happen over the next 6 months. It might do another 300,000. It might do more. It might do less. It's the markets are a game of probabilities. And certificates of deposits, they'll give you certainty. You're not going to lose any money with a certificate of deposit. If you put $10,000 in for 5 years, you're going to get, like 0.45, annual a year. you're going to make like about $45 a year in interest income. You'll still have your principal, but you won't lose anything. Now, of course, you're going to lose purchasing power because the value of the dollar is going down, but that's a whole nother item. I'm Bagger Don at StockMarketCaddy.com. We're going to post this on our website to update the NICKLAUS. If you have any questions about how it runs, how it works, and more importantly, about our site, who we are, what we do, and who we are not, feel free to call me at 813-758-8263. Thank you.